Jim Lebenthal, the man we've started calling Mr. All In because you've been more bullish than anybody, and the market's been resilient. So, I understand where you're coming from. I'm just wondering how long this rope-a-dope, if you will, can last, and the market can continue to evade these blows. Does it last?
Look, I think it's a great question, and I'll be truthful with you. I'm a little nervous. I'm getting a little nervous about this Delta variant. I didn't mean to brush off the Southwest Airlines news from last week, and you see the TSA passenger flows are going down, open tables are flatlining, the case count's going up. So let me be clear. I am not changing my stance. I'm not taking risk off the table, but I'm certainly not being blasé either, and I think there's a double-edged sword here. The case counts are clearly going to get worse. It looks like this thing is peaking in mid-September, hopefully goes down as the United Kingdom did after that. But what does this do regarding the Fed? I know you want to get to that later. I know we will get to that later. But I just find it hard to be both worried about the Delta variant and an aggressive Fed at the same time. That just doesn't make sense to me. One of those two has to give. What I'm hopeful for, what I'm expecting actually, is that the Delta variant gives and that people continue with their travel plans, continue with their reopening and living lives plans, which will mean that these reopening stocks, which frankly still have languished off of their May highs, they still have languished. They have a lot of room to catch up, and I'm comfortable with my all-in trade. I'm keeping it on right now. The main message I'm giving you, Scott, and giving the viewers is I'm not being blasé. I think we got to keep a sharp eye on the horizon for what this Delta variant does.
Okay, so Mr. All In not changing his overall view quite yet. Bryn, you understand why Jim feels the way he does. Because the S&P's gone 200 days without a 5% pullback. We've done 48 closing highs on the S&P 500 this year. That's a remarkable stat in and of itself. The question is the game about to change? Do we need to pay more attention to China's economic slowdown? Should we be more worried about the Delta variant than the market obviously appears that it's not?
Well, I always like to try not to, first of all, overthink things and take from the market what it gives us. And I think as it relates to, we've had, I think, exactly 191 days without a 5% correction, which, by the way, is double the average. And so, I can see why the people like, a Mike Wilson or a Scott Minerd are saying a correction is due just because mathematically the longer it goes, the higher probability you get one. But I'm much more in Jim's camp because what are the alternatives, right? In the public markets, if you step to the side of equities, whether that's value or growth, you're going to languish in zero yielding fixed income assets and then do what? And I do want to remind the viewers that, when we do get a sell-off, which we will, don't forget there's two decisions you have to make. Selling is very easy. It always feels good. It always feels good to sell, take some chips off the table. But remember, you have another decision to make, when to get back in. And the weight of history tells us all that those people that sell get back in much higher than when they sold originally. And so I still think buckle up. We definitely have more. I think we have a lot of fog out there, and it's getting a little foggier. So I definitely am in your camp of things are a little bit unnerving, but I don't think the Fed's going to do anything surprising. I think they're going to manage our expectations like they've done, and I think you stay invested and really embrace the volatility, right? Embrace that volatility. That's really your only choice, I think, as a long-term or even shorter-term investor.